how to survive and even thrive in an inflationary environment. And are we headed for hyperinflation? That is the subject of this video. Welcome back to another episode of the Financial Fast Lane. My name is Martinsen, and today we're talking about inflation and even hyperinflation and what you can do to survive and even thrive. So first, let's take a look at how our economy is currently doing. As you can see, the US GDP is at all-time high. If we look at the stock market, it is at an all-time high as well. Price of homes, record-breaking all-time highs. Retail sales are up significantly, higher than they've ever been. The net worth of American households is highest it's ever been in history. U.S. job openings have also spiked. There are a lot of companies looking to hire. So you could say there's never been a better time or an easier time to find employment. Also, a really sharp increase in the number of quits, of people actually quitting their jobs. So this can come, I'm sure, coming from a few different reasons. I think a lot of that has to do with people's confidence that they will be able to find additional work. Another fascinating statistic are business startups. A huge spike in people, probably some of these people who are quitting their jobs are out starting their own businesses. U.S. wages and salaries are up significantly, and that's including the lower entry-level jobs. Companies are having to pay more to attract reliable employees. So there's a very hot, very strong economy from all these statistics, right? If we look at interest rates, surprisingly, they are historically low. They remain historically low. And this is a very unusual scenario to have kind of a red-hot economy where everything seems to be going so well. And we've got really low inflation, really low interest rates, which makes borrowing easy. So a lot of really good things going on here. But if we look at the consumer confidence level, there is a sharp decline. And so a recent survey done by Politico, they surveyed, based on all those who surveyed, 90% of Americans are concerned about the economy. 87% are worried about inflation. And so what is this concern coming from? Well, because we're really seeing a lot of inflation, right? As of November 2021, we're up about 6% or over 6% inflation across the board. Now, different sectors of our economy see a lot more inflation, right? Gasoline is up more than 6%. Food is up more. But on average, we're over 6%. So is this inflation transitory, like the Fed has been suggesting? More and more people are not buying into that idea that it's transitory. Transitory meaning temporary, that it really has stemmed from the supply chain backlog coming from the pandemic, and that once that gets ironed out, inflation will come back down. But most people do not believe that it is transitory. The inflation really is here. The root cause of inflation is the money supply. And so when the government pumps trillions of dollars into the economy that they have done recently in a very short order, that expanded money supply is what causes inflation. And so inflation is really, it just erodes your buying power, right? And inflation it's really a form of a tax. It's very unpopular to raise taxes, and the government doesn't like to, it's politically challenging, difficult to raise taxes, and so, but they want to spend anyway, and so they spend money they don't have. They borrow it, they print it, and that creates inflation. And so inflation, everybody loses value in their money. So it's really a form of tax. It's kind of a stealth tax, is one way to think of it. Our national debt continues to grow rapidly. We're approaching $30 trillion. It's concerning for a lot of reasons. The interest on the debt alone is mind-boggling. But as problematic as the national debt is, the more concerning number has to do with the unfunded liabilities. This is a huge number. It's over $161 trillion. And that represents the promises of the federal government that it has no funding for. There is no tax revenue that is earmarked to honor those promises. So we have some huge financial challenges down the road, but the massive spending and stimulus that the economy has received, it has resulted in a red-hot economy. And many aspects of it are very, very good. But now we face this devastating risk or fear of inflation. So do we have hyperinflation? Hyperinflation is not something we have never experienced in the United States. And we have experienced high inflation, and we're experiencing high inflation now. And I think it's going to get worse. But hyperinflation is really dramatic. An example of hyperinflation would be Venezuela, right? Since 2016 until now, they've just had devastating hyperinflation. So if we were to exchange a US dollar for a Venezuelan bolivar, right, which is their currency, $1 is equal to 453,000 bolivars. So $1, almost $500,000. So if you had $25, that would be an equivalent of over $11 million, not $11 million, but 11 million bolivars. So to fill up your gas tank, it's going to cost you more than 22 million bolivars. That is just, their currency has just lost pretty much all of its value, and so they start to shift to other currencies. But in the United States, we have not had hyperinflation. We have had high inflation, right? If we go back to 1979, we experienced 11.3% inflation in that year. 1980, 13.5% inflation. 1981, we were over 10%. And so we've experienced inflation, and we are experiencing it now. And it does erode our buying power, but it's certainly not hyperinflation. I think that the actual definition of hyperinflation is you have to be over 50% inflation for a period of, for like 30 days. So we're certainly not there, but inflation will erode our buying power. And so what do? So if we take a look at the different asset classes, just kind of speaking generally here, cash is one of the worst assets classes to hold, right? If you just have cash, with inflation, you're going to be losing buying power consistently. And so you don't want to just hold a bunch of cash. The value will decrease. And so equities. So equities would be like stocks or business ownership. So when you own a stock or stocks, you own fractional share of a business, right? So businesses, they tend to adjust for inflation, prices get increased, and so they're doing things to survive. And so if you own a piece of that business in the form of a stock or just your own business, those tend to do well in an inflationary environment. But you want to hold the right kinds of stocks, right, and have the right mix, of course. So fixed income, so we're talking about bonds. Bonds are probably the worst performing asset class in an inflationary environment. A lot of times people feel like they get nervous about the market and the economy, and so they feel like they're being more conservative. They move into bonds, but you're going to lose money in your bonds significantly in an inflationary environment. Real estate is an excellent asset to hold in an inflationary environment. If you own a home or you own any kind of real estate, it has appreciated, right? And it will appreciate in time. And so any real assets, whether we're talking real companies, stocks, real estate, this is where you really want to be. You want to own things in an inflationary environment. Now, if you have never if you're not a real estate investor or if that's intimidating, you can very easily own real estate through REITs, real estate investment trusts, which could be allocated to right in your retirement accounts. You could accredited investors could consider a DST, Delaware Statutory Trust, where you own a fractional share in high-end commercial real estate. So there's definitely some convenient and easy ways to own real estate, other than actually going out and buying some real estate yourself. Commodities, these are real things. So we're talking gold, silver, lumber, oil, wheat, corn. All of those things are going to increase in value. And so one of the things you want to be aware of is you don't get, a lot of times people, if you get nervous and they want to jump to one thing, right? And they move everything into gold. That really is not wise. You want maybe some, but you got to have the right balance. And it's going to vary for everyone's situation is unique. Now, you might be wondering why I didn't include digital assets or cryptocurrency as an asset class. It certainly is. It's an asset class. And it actually deserves its own video. And so I am going to make a video and discuss and talk all about Bitcoin and cryptocurrency. But so you want to be sure and subscribe if you have not. Make sure you get notified for that video and for other future videos that we do. So in summary, there are definitely things you can do to hedge against inflation. You want to make sure that you're well diversified. Putting all your eggs in any one basket is never a good idea. And so owning real assets, being well diversified, and probably one of the biggest things that you can invest in is yourself, right? In your own skills and ability. Because as long as you have marketable skills, you have the ability to earn and to generate income. And so don't forget, probably one of the most valuable assets you've got is your ability to earn. So I hope you found this beneficial. I would love to hear your comments. You can visit thefinancialfastlane.com for more information as well. And I look forward to seeing you in the next episode of The Financial Fast Lane.